As you know, Financial Reset University is live, and we have launched our first course, FIN101, an introduction to personal finance and investing. To help you get more familiar with the content of the course, I've been dedicating a walkthrough video to each unit. In this video, we're going to explore Unit 3, the pillars of investing. In the first video, we dive into the anatomy of the business cycle and learn that there are 4 distinct phases and that the business cycle does not always move in one direction. It can actually move out of order and has done so in the past. Something I find interesting is that different asset classes thrive in the various phases of the business cycle. So if we happen to find ourselves in a depression, that doesn't necessarily mean we need to go to cash. We also learn about inflation and how the central banks tighten or loosen our money supply depending upon what they are trying to accomplish. In the second video, we learn about how a stock is born and compare and contrast the two most popular structures, those being common and preferred stock. We dive into the price to earnings ratio, and we learn that with a PE ratio, we can determine if a stock is overpriced or undervalued. From there, we learn about beta and the risk involved with price volatility, and we touch on fundamental analysis, where we learn about the income statement, balance sheet, and cash flow. As you might imagine, the third video tackles the bond market and fixed income. We highlight the 3 most common structures of debt. We talk about the credit quality and also touch on the taxation of each. We learn about the yield curve and how to use it as a forecasting tool and the value of having a diversified portfolio of stocks and bonds. We wrap up this unit learning about mutual funds and ETFs. Diversification made easy, as both of these investments own a little bit of a lot of different things. And although these 2 types of investments have similarities, they also have very distinct differences, including how they trade, their expense ratios, and taxation, which you will want to pay attention to as you build out your investment portfolio. That wraps up Unit 3, so be sure to like, follow, and subscribe, and check back tomorrow for a walkthrough of Unit 4.